When you first started analyzing transactions in Unit 2, you just looked at what accounts would be affected and whether they were increasing or decreasing. Then you looked at how to record transactions on the transaction analysis sheet. You took the balances from the balance sheet from the month before and put the opening balances on the transaction analysis sheet. Then you recorded the transactions, got the new balances for the accounts at the end of the month, and did a balance sheet with the new account balances. We are moving on from that, and rather than recording the balances, opening balances on a transaction analysis sheet and recording the transactions there, we are going to set up an account for each of the accounts on the balance sheet in something called a general ledger. And a general ledger is just a listing of all the accounts and their balances on the from the business's balance sheet. The first such of these accounts we're going to use are called T accounts, and they're called T accounts because they're in the shape of a T. And with T accounts, you need to learn the rules of where you record an increase or a decrease to an asset, liability, or owner's equity. But first of all, I'm going to explain some theory about T accounts to you. If you look at the sheet I have displayed here, it has the fundamental accounting equation on it, A equals L plus OE. I'm going to use that equation to show you how to record transactions in T accounts. I have drawn T accounts below the fundamental accounting equation. And on a T account, the left side is the debit side and the right side is the credit side. That's all debit and credit means. Debit just refers to the left side of a T account, credit just refers to the right side of the T account. But depending on what type of account it is, will depend on whether debit increases the account or decreases the account. I have written the rules below the fundamental accounting equation. Assets are on the left side of the accounting equation, therefore they increase on the left side or debit side and decrease on the side opposite. The opening balance in any asset account goes on the debit side too. Liabilities and owner's equity are on the right side of the accounting equation, therefore they increase on the right side or credit side and decrease on the side opposite. The opening balance also goes on the side it is in the accounting equation on the right side. Also think about where these accounts are located on the balance sheet. Assets are on the left and therefore they increase on the left, and liabilities and owner's equity are on the right and therefore they increase on the right. When we're looking at owner's equity, the debit and credit theory will look a little bit different in the future, but for now that's the way it's done. Debit, the short form for debit is DR and for credit is CR. Just remember this is very, very, very important. For every transaction, your debits always equal your credits. Your total debits must equal total credits for every transaction. There can be more than one debit and more than one credit, but the total amounts of debits and credits must be equal.